Hey there, and welcome to the accounting team. We are absolutely thrilled to have you on board. Now, I know starting a new role can feel a little bit like drinking from a fire hose, right? Especially when you're trying to figure out a brand new ERP system. But hey, don't worry, because that is exactly why we're sitting down today. Think of this explainer as your ultimate mentor-led guide to totally mastering the month-end close process in Dynamics 365 Business Central. We're going to walk through this entire thing together, step by step, to really lock in that workflow. So let's dive right in. First things first, take a nice, deep breath. Notice that quote right there. Business Central doesn't force you to close periods. That's right, there is no need to panic. Unlike some of those older, super rigid systems you might have tangled with in the past, Business Central isn't going to suddenly lock you out or, completely crash if you don't hit some magical close button at exactly midnight on the last day of the month. But just because it's technically optional doesn't mean we just skip it. We actually follow a really structured set of period-end activities to keep our books absolutely spotless, accurate, and completely ready for reporting.
So here is our game plan for today. We're going to cover 1, the General Ledger Foundation, 2, mastering sales and receivables, 3, purchases, payables, and intercompany, 4, managing fixed assets, and finally, 5, sales tax. All right, kicking things off with Section 1, General Ledger Foundation. This is where we lay down the ground rules for the entire system for our current accounting period. Our absolutely critical first step here is specifying the posting periods. Basically, by restricting these dates, we're locking down the system. It guarantees nobody accidentally records a transaction in a closed month, which, trust me, saves us from some massive reporting headaches later on. With the gates securely locked, we make our GL adjustments, we post our recurring entries, like prepaid rent that we know happens every single month, and then we run our core baseline financial reports. This gives us our beautifully clean baseline to work from. You are tracking perfectly so far. Now, let's transition over to the revenue side of the house with Section 2, Mastering Sales and Receivables. To properly close out our sales for the month, every single lingering transaction has got to be finalized. So that means posting all those sales orders, invoices, and returns so literally nothing is left pending. From there, we record the actual cash that hit our bank via cash receipt journals and update any recurring sales entries. But listen, the absolute most crucial step here, reconciling accounts receivable to the general ledger. We have to guarantee that the detailed customer balances in our subledger match our balance sheet perfectly. Unbalanced reconciliations can cause some serious audit issues down the line, so we make totally sure this is locked in tight. Once all that posting and reconciling is finally done, we do a little bit of digital housekeeping. We run a very specific batch job called Delete Invoiced Sales Orders. As a best practice, running this batch job clears out all those old, fully processed sales orders that we just don't need cluttering up our active lists anymore. It keeps your daily workspace incredibly efficient and super clean. So, how are you feeling? We've successfully set up the GL and we've securely closed out our revenue. Take a second to just let that sink in. You're doing a fantastic job. Whenever you're ready, let's flip the coin and tackle the expense side. Welcome to Module 3, Purchases, Payables, and Intercompany. You're going to love this because the workflow here logically mirrors exactly what we just did for sales. Think about it. On the revenue side, we reconciled AR to the GL and ran a batch job to delete invoiced sales orders. On the expense side, we literally do the exact same thing, just in reverse. We reconcile accounts payable to the GL, and we run a batch job to clear out invoiced purchase orders. Recognizing this parallel structure is a real game changer. It's going to help you memorize the flow of the system in absolutely no time. Let's walk through finalizing those purchases. We start by posting all outstanding purchase orders, invoices, and the payment journals, which reflect the actual cash we sent out the door. Once our recurring journals are updated, we run the Aged Accounts Payable report. Let me tell you, this report is about to become your new best friend because it proves exactly who we owe and ensures that our subledger perfectly matches the general ledger. And then we just finish up by running that delete invoiced purchase orders batch job to keep our system hygiene in check. Now, while we're deep in the weeds of payables and receivables, we can't forget our broader obligations. We've got to process any intercompany transactions so that our balances with our sister companies don't end up causing major consolidation nightmares for the broader organization later on. And crucially, we complete our tax statements to calculate and process sales tax. This keeps us perfectly compliant with the government and, more importantly, avoids any nasty tax audit surprises down the road.
Congratulations! You've successfully navigated the core ledgers. We are now heading into our final major module, Section 4, Managing Your Fixed Assets.
Let's ground ourselves for a second with a clear definition of what we're actually trying to achieve here. Every single month, the physical equipment, the vehicles, the property our company owns, they all change in value. They experience normal wear and tear, maybe they appreciate, or maybe they require some major repairs. Our fixed asset period end tasks are simply the activities we perform to accurately record those asset value changes, calculate depreciation, and capture any upkeep costs before we officially close the period. So how does that actually look in the system? Well, we start by posting routine upkeep as maintenance costs, either through the fixed asset journals or directly via invoices. But let's say we do something major, right? Like putting a brand new engine into one of our delivery trucks. That fundamentally changes the asset's overall value, so we would post that as an adjustment or appreciation. Then comes the critical monthly entry, posting depreciation, which accurately allocates the asset's cost over its useful life. To wrap the whole shebang up, we just update and post the recurring fixed asset journal. And there you have it. You have just walked through the entire month-end close process in Business Central, from setting up the general ledger all the way down to managing fixed assets. You've seen just how logical and mirrored the system is, and you have these visual roadmaps right here to guide you every step of the way. So with this structured checklist in hand, how will you master your very first month-end close? I already know you're going to do incredibly well, and I absolutely cannot wait to see you apply this training and start exploring the system with total confidence. Again, welcome to the team.